So we're about a month and a half removed from the SpaceX IPO, and it's done what IPOs do. It's been a doozy. SpaceX, it originally shot up in the first 3 days, up over 25%, and a lot of people were elated. This is the worst thing that can happen to new investors because they believe that the stock going up proves that they understood what they're doing and that they're correct. But in reality, now SpaceX has crashed. It's now down 30% year to date. And just as a reminder, in order for a stock that's down 30% to break even, it has to go up by 43%. And IPOs are just volatile like that. But especially SpaceX was the biggest IPO in history. I mean, my barber who hasn't paid child support since '98 is talking about, yo, you need to get in on a SpaceX IPO. I just bought it on Robinhood. I got in early. When everyone is talking about something, it's typically about to crash. Individual stock picking is already risky, but IPOs are even more risky because they're more volatile, they're fresher, so they need time for price discovery. These companies are often unprofitable. We don't have any historical financial data to really base a price off of. SpaceX especially is being priced off of the belief in Elon Musk. We all know Elon and his group of fanboys and excitement that comes with anything that he touches. But the reality of the matter is that he's the greatest marketer of all time. People will genuinely look you in your eyes and say that this is a cool billionaire. This is a funny guy. He's someone that we can trust regardless of all of his incorrect predictions in the past. He brings the capital in, and that's what matters at the end of the day. We're talking $19 billion in revenue, 15% revenue growth, negative net income, and negative 45% profit margin. But because this is SpaceX, it is IPOing as a top 5 biggest company in the entire world. I did a video comparing it to its closest financial competitor, which would be Rolls-Royce. But Rolls-Royce market cap today is $155 billion compared to SpaceX's $1.5 trillion. And that's all because the belief in Elon Musk once again. Now on to his other biggest company, it's the same thing. It has the market cap it has because of the Elon effect. Tesla. A lot of people believe that he will roll Tesla into SpaceX in order to hit the $1 trillion pay package. I could see that happening. Tesla's been under pressure for the past few years, especially in China, which was its biggest market because the EVs that are coming out of China are just far superior technologically, and the price is orders of magnitude cheaper. The only reason that they haven't taken over in America is because they're effectively banned due to the tariffs. Anywhere where Chinese EVs are allowed to actually sell and compete in the open market, they're dominating. They've had the same problem that a lot of these AI companies have had, huge capex expenses, mainly on these chips and these data centers. Their cash flow has swung $1.1 billion negative, despite their revenue being up 26%, largely due to price cuts. Tesla is bigger than the other 37 largest car makers combined, and it's 10th in revenue. All of this is the Elon effect. This is marketing. This is belief in him. A lot of people will say that both of his companies are overvalued, and I'd probably agree with that. But the thing is, it's almost impossible to predict when and how low these will drop, or they may not. The thing that investors don't understand is that the market can remain honestly ridiculous longer than you can remain solvent. I am a registered investment advisor, but I'm not your registered financial advisor, so this is not financial advice.